Binance and Coinbase are collapsing, and the world of crypto is freaking out. Several cryptocurrencies being traded on Binance have crashed, and more are set to follow. With the federal trial awaiting Binance's owner, Changpeng Zhao, over criminal fraudulent charges, it looks like Binance may be going underwater very soon. And analysts are saying that this collapse will be even worse than the FTX crash. So, how did we even get here? The Securities and Exchange Commission, better known as the SEC, has for some time been on a witch hunt against corporations, celebrity investors, and executives in the crypto industry. Any regulation have been met with resistance from crypto purists. These purists argue that the point of digital currency is to make currency decentralized. However, a lack of oversight has meant that crypto markets have become a hub for volatility and scams, and the SEC is no longer sitting idle. Just this month, the SEC launched over a dozen allegations against Binance and Zhao. The SEC claims that Zhao and his enterprises have been misleading their investors and have been trading in US securities markets without being registered with the SEC. However, perhaps the biggest allegation being leveled against Zhao is that he's engaged in securities fraud. As such, the SEC has requested an emergency order to freeze all assets under the Binance US trademark. While Binance facing charges isn't anything new, the SEC case is different. Put simply, Binance gained legitimacy in the crypto world by marketing itself as being different from exchanges like FTX. The FTX crash happened partly because Zhao had been publicly accusing the company and its owner, Sam Bankman-Fried, of fraudulent activities. Once FTX started losing credibility with users, authorities swooped in. Zhao even backed out of a deal with FTX once Bankman-Fried was exposed. This helped Zhao in two ways. Firstly, he had removed a major competitor from the market. Secondly, he was now able to pitch Binance as a reliable crypto exchange, much better than shady exchanges like FTX. However, if the SEC has a strong case, it would mean that Binance wasn't so different after all. Top regulators at Wall Street have alleged that Binance had mixed its customers' funds with their own money and sent it to a secret company, Merit Peak Limited, an enterprise owned by none other than Changpeng Zhao, receiving a payment of $20 billion from Binance. A major chunk of the $20 billion is customers' money. In a statement released recently, the SEC claimed that Binance and Zhao divert customer assets as they please. To understand the case, we have to look at how Binance operates. The company has been registered in the Cayman Islands since 2017. Binance operates as a crypto exchange, but also acts as a wallet for users to store their coins. It also offers conversion services for crypto enthusiasts to turn their digital assets into fiat currency. Crypto users can also create their own coins and launch them on Binance. As the company operates a one-stop shop for all crypto needs, it became popular. However, to offer that many financial services gives a platform too much power. Even Wall Street establishments keep investment banking, trading, and hedge funds separate. Financial markets are already high-risk industries. Crypto takes that to a whole new level. Different cryptocurrencies operate under different rules and regulations. To keep all these non-financial digital currencies under one roof is not safe. The SEC has already filed charges saying that Binance had unlawfully ordered 3 essential securities market functions without registering with the SEC. While Zhao has come out saying that he's being targeted to generate buzz in the media, he claims that Binance has done everything in its power to keep its customers' funds safe and comply with the law. But the SEC is trying to sabotage any chance at making a deal. The problem is that Binance has a long history of avoiding regulations. The company has shifted through offices in Malta, Japan, and China, all to avoid being prosecuted by authorities in those countries. Binance has been banned in the US since 2019, ever since a new company under the name of Binance US has taken over the operations in the country. Binance US acts as separate from the main business. A new parent company was registered in the state of Delaware, under the name BAM Management was also set up. This might seem similar to what FTX did with their FTX US outpost. However, the SEC has not been convinced. For one, they consider Binance and Binance US to be the same. This is because BAM Management, which owns Binance US, is also owned by Changpeng Zhao. Zhao owned an 81% stake in BAM Management and sat on its board of directors until 2022. Zhao made Binance and Binance US do business with companies that he himself controlled. These included Merit Peak Limited, based in the British Virgin Islands, and the Swiss-based Sigma Chain. Zhao is a listed beneficiary in both of these firms. Many of the employees on the payrolls of these companies are Binance executives. Money injections from these firms were sent to BAM Management, which was then able to artificially inflate the price of Binance's esteemed BUSD stablecoin. Bloomberg has reported that BUSD needs to be backed by $1 billion in fiat currency to maintain its current value. These $1 billion cannot be tracked and have allegedly appeared out of thin air from a company that just happened to be owned by Zhao. Zhao also owned CoinMarketCap, a crypto news site, which posted information about the coin values and trading values of cryptocurrencies being floated on Binance US. It's been reported that Binance would often monitor these values and correct them according to their liking. This is similar to what Bankman-Fried and FTX did when they bought out the crypto news publication called The Block for $43 million. Sigma Chain was also allegedly involved in wash trading 48 newly listed crypto assets by being traded on Binance in early 2022. When a $45 million injection from BAM Management was received by Sigma Chain, $11 million were directed to buy a luxury yacht, allegedly for Changpeng Zhao. It must be noted that Sam Bankman-Fried of FTX went through very similar charges. Alameda Research, which served as a hedge fund, was caught injecting money into FTX-backed crypto assets to inflate their value artificially. If convicted, Changpeng Zhao could fall down the same path as Bankman-Fried. With struggles ramping up for Binance, crypto enthusiasts would turn to other exchanges. Unfortunately for them, Binance is not the only exchange facing a collapse. Coinbase, another notable crypto exchange, finds itself in hot water, as the SEC claims the company is operating illegally since 2019. Coinbase has been trading securities without proper documentation. The SEC claims that Coinbase is putting customers at risk by operating as an unregistered broker. The SEC sees all cryptocurrencies except Bitcoin as securities. To trade them, exchanges need proper documentation. However, despite the similarities in the charges, Coinbase's case isn't as detrimental as Binance's. Coinbase CEO Brian Armstrong has openly encouraged the SEC's investigations. He believes that regulation in the industry is important and should be supported by all exchanges. Armstrong believes the SEC's charges against his company are a result of confusion. To avoid such confusion, you should go ahead and like the video, which helps out the channel greatly and allows me to keep making content that keeps you well informed about all the latest updates in the world of finance. Now, back to the video. The SEC already cleared Coinbase to become a public company back in 2021. But since the SEC and CFTC have different definitions of what security is, companies like Coinbase face problems. Armstrong is sure that once the case is resolved in court, things will go back to normal. It must also be noted that, unlike Zhao, Armstrong is not sued for fraud or deception. Armstrong isn't charged personally either, unlike Zhao. However, Zhao has escaped prosecution up until now, because unlike Armstrong, Zhao isn't living on American soil anymore. Based in UAE, Zhao can't be prosecuted on US soil because the UAE and America don't have an extradition treaty. This makes arrest highly unlikely unless the UAE government moves against him. If he does fly to a country that has an extradition treaty with the US, he'll be brought to justice, as Zhao is also facing charges by the US Department of Justice and CFTC as well, mainly over money laundering charges. If successful, Binance could be banished from the US forever. and Zhao would not be able to conduct any business on US territory. This begs the question, what does the SEC aim to gain out of all of this? The pair of enforcement actions suggest the SEC has decided to take broad aim at cryptocurrency firms it sees as bypassing regulation. The agency is seeking to ensure that crypto companies either comply or stop operating in the US. As punishment, the SEC seeks to gain interest, penalties, and other fines from the companies it is prosecuting. The first kickback against Binance would be the end of its trading services in the US. The SEC also wants to bring back foreign assets brought by Binance to the US. As for Coinbase, the company has threatened to relocate to London if the SEC doesn't offer a favorable deal. It must be noted that nearly all crypto firms have been losing value. Coinbase, which was around $100 billion in 2021, is now worth only $12 billion. The lawsuit by the SEC meant its value had sunk even lower. On the day of the lawsuit, Coinbase shares closed 12% down, and customers had pulled out over $1.3 billion from the Coinbase servers in a single day. Despite the strong case the SEC has against Binance, it's facing a lot of criticism from the crypto community. SEC's actions bring the value of the entire crypto industry down. This negatively affects the portfolio of investors all over the world. The SEC is also notoriously unaccommodating when it comes to its rules and regulations. The agency does not have a set of rules for crypto exchanges. The chief executive of the Blockchain Association, an industry group, pointed to ongoing discussions in Congress as evidence that laws governing the crypto industry are still being discussed. This meant that the SEC did not have a case against Coinbase. As for Binance, even with the charges of fraudulent behavior, the company is not in immediate danger of collapse. Binance has also repeatedly asked its customers, especially those outside the US, to calm down. This is because the SEC's actions concern only Binance US users. The prosecution of two high-profile players in the crypto market will have far-reaching effects on the crypto community as a whole. One of the many reasons why so many crypto enterprises are struggling is the lack of trust in the market since 2022. Nearly all coins have been losing value. Bitcoin, the industry standard, dropped 25% in value when the FTX crash occurred. In a scenario where Binance collapses, the entire market could die out. This is because Binance is responsible for nearly 70% of all crypto transactions in the world. Essentially, the involvement of the SEC goes against the basic rules of cryptocurrencies. The crypto market is supposed to act as a system of finance that is outside government control. To have government agencies like the SEC regulating the crypto market defeats that purpose. Altcoins like Solana, Cardano, and Algorand have all lost significant value since Binance and Coinbase were sued. Within 24 hours, several altcoins dropped by over 20% in value. Algorand went as far as reaching less than 10 cents apiece in market value, which was a record low point. Surprisingly, Solana, Cardano, and Algorand were mentioned by name in the SEC's case as securities. One of the only coins to have maintained their value in this crypto downturn was Bitcoin. The SEC does not consider Bitcoin as a security, and as such, the SEC's case has no jurisdiction over Bitcoin. Bitcoin is trading at the same price as it was back in March 2023, when the SEC began their witch hunt against Binance. Ethereum also maintained its value. As such, many crypto enthusiasts have flocked to these two coins. It's largely believed that, at least in the short term, Bitcoin and Ethereum are safe bets. It's safe to assume that the crypto world is in for a major shock in the coming weeks. The collapse of Binance would make the FTX crash look small in comparison, simply based on the massive number of transactions that take place on the Binance platform. What's concerning is that both Coinbase and Binance had over $1 billion withdrawn from the platforms once the news of the SEC prosecution broke out. It shows us that market trust in a decentralized financial system is not as solid as some crypto users think. With Congress deciding a set of guidelines for digital assets, exchanges like Coinbase will have to adjust the way they work. Congress's involvement might also make it harder to launch new projects. The SEC and other such agencies may see their power expand in the future, and stablecoins like Bitcoin and Ethereum would likely become the industry standard for other smaller coins to follow. But one thing is for sure, the SEC will do anything in its power to limit the influence of figures like Changpeng Zhao in a market that is already very risk-prone. The immediate collapse of Binance seems unlikely, but cases against executives of the company could prove to be detrimental to the company. Binance US will also have a hard time trying to distance itself from the international Binance platform. All in all, things look bleak for the company. As for Coinbase, Brian Armstrong has a strong case in his favor, which can save the company from an FTX-like scenario. If you enjoyed the video, be sure to hit the like button and subscribe to the channel. Thanks for watching, and see you next time.